Hey everybody, how you doing? This is QuickBooks for Real Estate Investors. This is going to be part 7C. I didn't plan on doing this, but I forgot something, so I needed to add another video. If you haven't watched 7A and B, I suggest doing that so you can be on the same page, but I'm going to pick up right where we left off, and we just made some changes to our account structure for buildings and building depreciation, but we forgot this account here, or I forgot, furniture and equipment. Furniture and equipment is also fixed asset, and generally companies adopt a rule for the level or the threshold of which they're going to depreciate. So for example, say you bought a new refrigerator for one of your rental units. It might cost you $250, and you say, that's below my threshold, that's too inexpensive for me to go through the trouble of depreciating that purchase. So I'm just going to write that off as an expense. But say you bought a super nice stainless steel refrigerator for a high-end luxury unit, and the thing costs $2,500. So now we've gone from $250 to $2,500. That might be something that you say, okay, my depreciation threshold is $2,000. So anything over $2,000, I'm going to depreciate. And really, it's up to you what that number might be. Some people say 500. If you're pulling in $100 million in revenue, you might not depreciate anything under $50,000. It just depends on the nature of your business and how much work you want to do. If you do a major renovation or a rehab, say you got a kitchen and you put in a new kitchen and that costs you 10 grand, that's definitely something that you want to depreciate. That would be something a little bit different, but the cost of the appliances and everything that went into that renovation are included, and that's something you want to depreciate. But if you're just buying a replacement refrigerator, or say you did one of your air conditioners broke, or somebody broke in and stole your copper, those are things that are really just repairs, because you're replacing what was already there and you're not making any sort of improvement. So it's up to you how you want to do this, and how much work you want to do, or how much work you want to make your CPA do. So if you're watching these videos, chances are you probably don't have a CPA or accountant who's going to be doing this, or maybe you do, I don't know. But anyway, it's good to have a fixed asset account for furniture and equipment, and the threshold that you decide is really up to you. Maybe I'll do a video on that later, but kind of just eyeball it and see what kind of purchases you're making. Really, you don't want to be adding a whole lot to furniture and equipment for depreciation. I can tell you in my business, for one of the properties I own, it's just $500 is our threshold. So anything over $500 we throw into there, and we depreciate that. But then again, I am an accountant, so my tolerance for pain is a little bit higher when it comes to bookkeeping. So anyway, that's up to you. But this furniture and equipment is important. We do have to have this as a fixed asset. We don't really need to do anything with this account. It's great how it is. One little idiosyncrasy of mine is that I don't like the word "and." I prefer the ampersand because I like it how it looks. So all I'm going to do is change that. But besides that, furniture and equipment as account is fine. You might rename that to say something like furniture and appliances, or you might just say appliances. But just know that this account is for things that you buy that aren't buildings, basically stuff that you're going to put into your property. However, we do need to add a accumulated depreciation account for this, and we also need to add a depreciation expense account. So I'm going to go through and do those quickly just while you watch. So Control N for new, and this is a fixed asset. This is going to be my accumulated depreciation account. So I down arrowed twice, spacebar, Control Enter, and just like the other account, I'm going to keep the name the same. So this is going to be furniture ampersand equipment, and yes, I want this to be a sub-account of accumulated depreciation. Control Enter, save. So now I've got, under accumulated depreciation, all of the accounts, all of the fixed asset accounts that I want to depreciate are going to be there. Remember, we don't depreciate land because it does not wear out, so that is why it is not part of accumulated depreciation. Alright, the next step is then to add another account here under depreciation expense. So I'm going to go Control N. I'm going to down arrow once and select expense by using the space bar. Control Enter. My account name is just going to be the same as like before, so I'm going to do furniture ampersand equipment, subaccount, yes, depreciation expense. Control Enter and save. So now you can see that we've got all of this matched up. It looks good. Furniture and equipment, we've got residential commercial under depreciation expense, just like we've got commercial furniture equipment and residential under accumulated depreciation. If you wanted, I might do this now, you could take away depreciation because it's already noted in that top header account, so you don't really need to have that there. It's kind of redundant. So there we go. That adds furniture and equipment, and that's it. Thanks for watching. Comment, subscribe. If you got a problem, let me know. Maybe I can make a video and help you out, and we'll see you next time.